Welcome to Tradersdna SGT Trademakers podcast series, powered and hosted by Intelligent HQ and Citiesabc, where we cover the latest news of trading strategies and markets. My co-hosts for this weekly podcast series are Peter Kristensen, the CFO and partner of SGT, and Adam Hill, the COO and also partner of SGT. So let's introduce my co-hosts. Peter Kristensen has an accumulated financial market experience of over 35 years. His career began with a small Danish bank back in 1986. And by the mid-1990s, he was working for Saxo Bank, one of the pioneers of the online trading industry, where he became the co-head of sales trading and technical analysis. He was then seconded to Synthesis Bank, now Saxo Bank Switzerland, to establish their presence in the online trading world before leaving in 2006 to establish JP Fund Services, JP Integra, and other business partners and co-founders of several other businesses like Trademakers, which is based in Switzerland. And he's also members of an advisory board of several companies such as Arise in Denmark and Canaverse and more. Now, Adam Hill, as Chief Operating Officer of SGT, an experienced corporate strategist plus blockchain advocate. Adam is a digital and marketing leader with strategic and operational experience of driving change in large, complex organizations. Adam has more than 2 decades of experience in finance, marketing, technology, and customer engagement policies and practices, and has successfully delivered results-driven solutions and a strategic mindset to companies such as Bupa, Hotspot, FXCM, Maersk, Marex, Spectron, Gain Capital, and many others, including JPFS in Switzerland. And myself, Hilton Supra, the Vice Chairman of Studium, Citiesabc, Tech ABC, Fashion ABC, Open Business Council, and of course, our platforms, Intelligent HQ, which are AI, blockchain, and fintech businesses, which we use to build our fourth industrial revolution type technologies, which include AI, blockchain, and IoT. I have more than 30 years of banking and asset management experience in London, from quantitative asset management, capital markets, hedge funds, and private equity. I've worked for Morgan Grenfell, Deutsche Bank, AXA Investment Management, EIM Fund of Hedge Funds, and Cheney Capital. Well, with some of them spectacular failures like FTX, Fed, and inflation, it's imperative that we unpick, understand, and examine why this happened. So, a personal comment from Peter. Good day to you, Peter, and welcome to Tradersdna.
Thank you for having me. Appreciate.
And Adam, thank you very much for your time and your contribution to what I believe is going to be a fantastic podcast series.
Hi, Hilton. Thank you very much for the invite. We're looking forward to sharing our thoughts and hearing some feedback.
So on that basis, as I mentioned, in this sort of challenging world today, where there's the traditional financial markets, which has a plethora of new asset classes that collide with traditional strategies, and the investors have to navigate with such rapid change in risk and opportunities through this. Can we talk a little bit? Just give me your take, quick insights into what you see in the world today, and how this podcast series is going to be able to drive forward the ability for our viewers today to understand how to navigate this. Adam.
Thank you. I think the big picture here is we're seeing a collision of worlds at the moment. The last 5-8 years has seen an explosion in new technologies, obviously blockchain, emergent AI technologies, virtual reality, all of this. And these are very, very, very powerful tools. Most typically, you mentioned it yourself with the FTX scandal. This is beginning to start a sort of trickle-down effect where the realization, I think, is beginning to dawn that with these very powerful new technologies comes the old-fashioned view of the responsibility in how you operate your new technologies. Yes, they are fantastic. Yes, they are terribly exciting. as potential tools to increase liberties and traceability and accountability across digital platforms and across the world, but without some degree of, dare I say, sort of old-fashioned, rigorous assessment of the risks and understanding of the risks that you're taking before you make a trade, before you place an investment. This is just what FTX has highlighted. The Gemini twins, they're in trouble as well because of the same sort of mistakes that you've given this enormous amount of power through the technologies and through the eye-wateringly large amounts of money that these firms have been able to raise with very little more than a PowerPoint projection of what they aim to build. And they built palaces like Kublai Khan, but no one has sort of really stepped in to consider, can we learn anything from the traditional world of finance? Can we learn better how to protect our investors and our partners, to guide them, and to provide factual, empirical data upon which they can make an informed decision, rather than to succumb to hype, which is often being sort of fostered and promulgated by overpaid or well-paid influencers and social media types who perhaps have a lot of background experience, who perhaps have just received a good paycheck for their endorsement. And I think it's time to shine a lot more light on this meeting place between the traditional world and the crypto for the benefit of both. The traditional world has an awful lot to learn from the agility, the swiftness, the response to customer demand that the new technologies can provide. But likewise, the new technologies stand to gain an awful lot from looking at the traditional world and understanding how do you best protect other people's money, because that's the business that we're all in.
Absolutely. And Peter, obviously you've many years of being in the financial markets. This is not the first time we've seen this.
No,
we've seen this many times.
Definitely not. And I'll bet you it's not going to be the last time we're going to see this. The good thing about what's happening at the moment, if we can talk about that it's good, is that it's cleaning up. We saw that in the .com, we saw that with Enron and so forth. It would be good, but it's going to take time for the whole thing to actually be cleaned up as much as possible. Again, as Adam was saying, you cannot avoid the traditional financial, how to run a company. Again, what we talk when we're looking at FTX, it's, what can I say? It all looks fantastic and it's one big happy family and so forth. But to give a responsibility to a 27-year-old of $10 billion in AUM, I mean, that's just out of this world, to be honest. You suddenly lose, I would say, the connections to the ground and say, okay, what's obvious just in front of you? But it all, as long as it goes well, then it's absolutely fine. But sometimes you got to stop up and breathe and see and look at what's actually going on behind the company. I think the ones who's most in trouble is actually the auditors and the accountants. The other people within inside the company itself, they can just play stupid. Yeah, but I'm only 27. I didn't know. So again, let's see what happens. It's going to take some time because it's one of the biggest failures in the market at the moment and actually in history. So let's see.
No, I understand. I mean, the key thing here is the word governance at the end of the day.
Yeah, it is. But if you also look at, we go back to the ICOs, the IEOs, and whatever they were called, they raised a lot of money. And if we look at it, 95%, according to the companies that I've been looking at and I've been trying to guide, they fail on all the traditional stuff. Money in, money out. If you don't make any money, where's the money going to come from? You can have the best technology in the world, but it's all about running the company and have respect for other people's money. Yes, it might take just a bit longer, but it's the beneficial of the investors, token holders, token buyers, and so forth. And this is what I think is going to happen. People are going to start thinking about Will I actually go into this project? What's the governance? Who's the CFO of this company? Is it a CFO that's 25 years old? To be honest, I would stay away. Gotta have somebody, I can't say this on camera, but gotta have somebody who's got hair on the chest or balls to tell the CEO who's actually 25, sorry, that's not going to happen. This is not the right way of spending the money.
Mm-hmm. Absolutely.
And that's what I think we're going to see with FTX. We're going to see a lot more serious projects coming out with the right governance because of this. And yes, it's not the best thing that's happened in the world or to the market, but I do believe long term, it will be a good thing.
Opinion of lawmakers in the US. Do you think that FTX has committed old-fashioned embezzlement or wire fraud or securities fraud or money laundering?
I'm sure the internet is full of unsupported, undocumented opinion. I'm not going to add to it. I don't have a legal background. I think the main consideration, Pete said, there is some good news here. And I think whenever a get-rich-quick scheme begins to fail, and then multiple get-rich-quick schemes, and not that they're necessarily scams, it could all have been a very, very terrible mistake. But when they do begin to collapse, we have an opportunity to re-examine, so how do we make this better? On the one side, you have the push towards greater external governance, abrogating more power to governments around the world. That's one option that the world is seeing, that this can't happen again. Therefore, the only people who we can trust to govern us unbiasedly are the politicians. That's one potential argument that could be made. Not my argument, but it is one. The other one, I think, is the much more realistic one, where business itself is going to have to govern itself and realize that if the investors begin to dry up for these projects, they're going to dry up because they know that 90% of these projects fail. The tech could be fantastic, the idea could be brilliant, but the speed and ease with which this money is being raised has created a small mini generation of businesses whose sole business model, and as I see it, is a fundraising model. Mm-hmm. It's not really a question of, do we have traction? Are we getting feedback from our clients? Are we making money from our clients? Are we gradually building up the case that the world wants what we have to build? No, it's we use the money that we've been raised, and we go to the next round of funding and we raise more money until hopefully we throw enough greenbacks at this that it begins to take off. Certainly for a lot of investors, whether they're privates, institutional, family offices, they are going to be asking more and more searching questions. And the only people who can answer really these questions in terms of the financial stability and the robustness of the financial model of the company are the CFOs, are the accountants, are the bean counters. There's a reason that we have them, not that they should provide strategy necessarily, but the justification, the empirical-based justification for a business, and at what stage you begin to take a salary, at what stage you begin to pay your dividends out, at what stage you begin to go out to raise further funds once you've got proof of fund. I think it's going to see a rolling back to a slightly more traditional world where the investing society, the investing community rather, is saying, okay, we got lots of questions, we love the idea, we love the tech, we could all be millionaires this time next year or billionaires this time next year. So what is your plan to get there? And have you done it before? I mean, a number of the projects and companies that we work with on a daily basis, simple things such as going to a website. It's the first thing all of us do. We say, oh, this is an interesting company. Send me the link. Click the link. I want to see who's behind this. Who are the individuals? Are they prepared to make themselves public? Are their faces, their names, their details in the public domain? And have they got any experience in doing this before?
Absolutely. So moving from the digital asset insights that we've been talking about now into what we call the more traditional macro and markets. Big day today, Fed and inflation. The Fed has to potentially portray itself as tough on inflation, even as it pushes through a smaller potential rate hike. Your opinions on this, Peter?
On the fundamentals today, there's so many different numbers coming out, and people think that one little number actually going to change the whole fundamental view and the whole fundamentals way the market is going. I don't think so. It's going to take a bit longer time to actually change this around. I think with all the printing money today, you have a lot higher actually inflation that we should have, simply because people get more money just by printing, and that's going to stop. So the government, the central banks are actually in between a hot place and a rock. Where the market is going to go at the moment, my personal opinion is we have not seen the low yet. We're going to see a lot more worse things coming out. People can't pay their rents. People can't pay their mortgages and so forth. If we look at the credit card debts in the States compared to the savings, the spread is the widest ever. So we have a lot higher credit card debts. We have a lot lower, more or less the lowest savings at the moment. And when things happen in the US, it goes to the rest of the world. It's difficult to say where it's going.
Okay. Adam, what do you think?
It's the $90 million or $10 billion question. I think quite clearly there is a momentous shift at the moment. We've got a massive energy crisis across the world. We have literally the Wild East breaking out in Eastern Europe, and with Putin and Ukraine. We have apparently across most of the Western world either collapsing governments or switching governments with a greater frequency than I switch my socks. So there's a massive degree of instability. So my gut feeling on this, for what it's worth, is twofold. I think in one side, you have to look at when we have this much sort of activity, both good and bad in the marketplace, what are the staples? And I think that's probably, you're looking at the commodities market. For longer term investors, we're looking at raw materials. We are going to see, I think, a battle, a clash of civilizations, if you like, across the world for these resources. Now, some will be genetically or engineered by scientists. Many, however, will be dug out of the earth in Australia, across Africa, South America, wherever it seems to be. And the money will be chasing this down. But this is a long-term plan. This is almost an institutional, multi-decade plan. I think for the average investor, the challenge is to accept what your fathers and your grandfathers and grandmothers told you. If it sounds too good to be true, it probably is. A little bit more cynicism, a little bit more of a critical approach. And this is what, traditionally in the West, we've been very, very good at, developing the tools of critical thinking to apply them to all areas of our world. And we need to do the same when it comes to our money. Whether if instead of just taking a punt, the number of people who have entered into the crypto space and who bought their coins or their tokens and they're holding on to them, the hodlers, this is not a strategy. This is close your eyes and hope. I hope for many of these people that it is successful. However, I think if you want to take a little bit more control of your financial future, it's going to take a little bit more effort to understand where are those opportunities and what opportunities are being provided to us by people who have a track record in doing so, across asset classes, across geographies. Perhaps listen less to TikTok videos about some made up person recommending something. There's a reason they're recommending it, because they're getting paid to do so.
Yeah.
So we need to understand that perhaps it's going to require a bit more of us to do our own research, to ask the difficult questions, and to and to ask the companies that we're considering working with, why should I trust you?
Absolutely. I mean, this is a very interesting segue into looking at trading strategies and opportunities and risks. In terms of the opportunities, looking at invest like a pro, build an investment portfolio of professional managed strategies at a fraction of the normal cost. Fractionalize investments, which I think is very interesting. We'll talk about that. Make it possible for everyone to participate in institutional grade investment programs, which until now have only been available to the ultra wealthy and the financial institutions. So our audience today, is listening to us and wanting to participate and understanding that, yes, commodities, as you said, Adam, are going to be part of that geopolitical risk, and looking at traditional investment strategies in terms of, bonds versus equities or commodities or certain types of crypto, etc., how that fits into a portfolio. But risk is really, really, really important. So in that sort of framework, Peter, which is something that you're passionate about, is bringing professional investment strategies to a large proportion of people who are interested in investing their money. Talk us a little bit through the opportunities that are available today.
Just to step back 30 seconds when Adam was talking about the market and so forth, why we're doing this. These video things or video conferences that we're actually doing right now is simply to put a face on the strategies, put a face to who are we. We're not afraid. We don't hide behind anything. The same thing with the managers. So it's very important. As for an investor, as for us, we would like to do our due diligence on the people that we work with. Now, Trademakers in itself is a brand under JP Fund Services with the licenses in Switzerland. It's been our vision for the last 3 to 3.5 years, where we're actually taking a step back and say, what do we need to actually launch this? So it's all about the foundations with the right licenses, with the right banking, with the right structures and so forth. Trademakers makes it possible for ordinary investors that would like to have their money managed by professionals, where there is a risk team overlooking the different strategies and so forth. But if you go into a hedge fund, you have to have $100,000. So if you have a saving of $200,000, you've got two possibilities. Now, what we're doing here is we're the first actually in the world doing what we're doing, where we actually make agreement with the different funds and the different setups, so we can actually fractionize the investment into the funds. We are always invested into every single program or fund that we have on our platform, with our own money or with the company's money. So a person that would like to diversify his 100,000 savings and don't want to just go into one fund, would never recommend that, can now actually have a possibility to go into 3, 4, 5, 6 funds, or 3, 4, 5, 6 different programs. And we put the minimum for most of the programs and funds to $5,000. So you can tip your toe in and say, this is something that I really like. Means that you now actually be able to see hour by hour performance of the program, day to day and month to month and year to year, of course, and see how the program and the investment you like. You can always add an extra $5,000 or $10,000, but it gives the possibility to diversify your investments. And this is not something that's been possible for the ordinary, if I may call it that, investor in the market. And that's Trademakers in itself.
It's very, very important that access to these platforms is you need to be qualified. You need to be able to qualify well to come into that in terms of understanding what you're getting into, because we need to understand what your risk profile is at. Can you, Adam, talk a little bit about what ways in which you look and classify different risk appetites?
Sure. Let me just to sort of underline what Peter was saying. The the idea with Trademakers, the marketer inside me says, we're democratizing access to opportunity for MAR and PAR investors across the globe. And that is, in all intents and purposes, it's our attempt. That's our goal. By doing this, by taking institutional grade investment programs, funds, any really, regardless of asset class, we're building up a portfolio of multiple investment strategies. We're also launching some pre-made portfolios early in 2023, which are sort of done for you portfolios, as well as the smorgasbord approach where individuals can come in and select their the investments that they like to participate in. As Pete said, this hasn't been possible thus far. It always requires at least 100, usually 150, $200,000 to make one investment, and you need to be professional and yada, yada, yada. Mm-hmm. So Trademakers is owned by JPFS in Switzerland. JPFS has been around for nearly 20 years, providing regulatory services and fund structures to organizations in 6 different continents. And our experience from that was the level of complexity for the average investor, even if they have 200,000, is almost self-defeating because the painful. And we thought, well, if we go through that, so that we don't need our clients to go through that, then JP can provide the regulatory, the risk management, and the compliance oversight that these investment programs demand. The other part of it is the transparency, the ability to see, tick literally hour by hour, what's happening, how are each of these programs performing. To go back to your question regarding sort of the risk profile on Trademakers, we've sort of broken down all our investments, and this is very much a work in progress. We're developing an incubator solution whereby we're testing out new programs, new strategies with our own money and with the manager's money, so that we can monitor it over a period of at least sort of 3 to 6 months, where we can ascertain how rigid, how robust is this strategy, how well is the manager keeping to the strategy, and keeping within the sort of confines of what is being advertised. And that's important for us, that the programs themselves live up to the promises that the marketing blurb provides. Because we are, you've seen so many of these examples where there is no accountability whatsoever. And I think there's an awful lot of people who are sick and tired of companies going, oof, not our problem, caveat emptor, it's your responsibility. That's fair enough, in our opinion. We have to do that work. We've been doing it for 20 odd years, so we hope we've got a pretty good grip on it. Plus, of course, the managers themselves are either regulated themselves under their own licenses, or they fall under our regulatory umbrella. So as we build out the suite of investments, as individual investments and pre-made investments, we're looking at creating a collection of different groups across asset classes and with a variety of risk profiles, from the very relatively high risk profiles, and they could be crypto-related projects, to very, very low fixed income related products, so that our clients and our partners all have a genuine choice and can talk to us to identify ways in which they can create portfolios which actually match their investment horizon as well as their risk profile.
And in terms of the type of strategies that you and the managers that you are employing or deploying on the platform, how would you classify them? Are they hedge funds? Are they traditional long only with high turnover type strategy, opportunistic? Just give us a sort of a flavor of the typical type of managers that you would have on the platform.
When we're looking at different strategies, we're not going to go in and have strategies that you can buy in the bank for $1,000. It doesn't make sense for us. We have the alternative strategies. We have hedge funds. It can be long short hedge funds. It can be crypto funds. but they still have this minimum of $100,000. But now that we can actually say we do and we will have different crypto strategies, but you can tip your toe into it with $5,000 instead of putting in $100,000. We got the 4 strategies. There's 1 crypto, there's 2 FX, and then there's another alternative strategies as well. Now, we're just setting up with this pre-built portfolios. Some of these strategies that we have inside the portfolio does not exist on Trademakers, but that will still be coming. We are onboarding quite a few funds and strategies at the moment. We launched 3 months ago, but I have to say the response that we've had from lawyers, from other funds, they're like, wow, never seen this before. And that's the whole point. Make sure that an ordinary, as what Adam was saying, mom and pop's investor, have a possibility to be managed by professionals with the same conditions. That's really important. It is the same conditions as if you got 100, 2 or 300,000, than if you have 5,000. We do not add anything on top of that, which is really important.
Just really to underline this, we're hearing from a lot of independent financial advisors who are working with clients on a daily basis to help them build a retirement fund or whatever their ambitions are. That a lot of their clients, of course, are going to the place that they know best for their financial advice, and that's a bank, which is interesting. When they're not being bailed out by the taxpayer, they're pumping up the interest rates higher than the Bank of England can ratchet them up itself. So they're stuck in this situation where they trust the bank, largely not to run away with their money. But of course, the money that the bank is making from all of these transactions is way and above what the investor gets typically. And of course, you have to ask the question, well, what's the benefit in this bank recommending this fund to me? Is it because it's the best fund for me? Or is it because it's the best fund for the bank to pimp? That's a question that depends on how noble and how much integrity your bank and bank manager has. Whereas again, we'd like to remove a lot of that uncertainty, and through practicing what we preach and making all of the data available to people through platforms such as this, where we can reach out directly to an audience and address their questions. We don't want to hide. We're not going to be like a lot of the crypto companies who you don't even know who's behind them, or the traditional banks who no one can any longer really get in touch with other than via an app, which occasionally works. We've got to be front and center because it's an old-fashioned view. It's an old-fashioned view that says we must and we should have respect for other people's money. That's how we make our money. And by making our clients benefit from various types of programs that suit their ambitions, we will all benefit.
So this sort of moves us on in terms of, in order for this to be an opportunity for potential investors to come on board, we really have to go through some of an education process and explain certain things, certain themes that we'd like to explore with this podcast series. Of course, we've mentioned words like fractionalization in terms of providing access in smaller amounts for small investors to get access to institutional type of investment strategies. We'll talk about multi-asset trading, different asset classes, and combining different asset classes together in such a way that you are diversifying away from the risk and maximizing opportunity. And of course, there's the digital asset projects and digital asset strategies that are available. And then, of course, the big debate that we can talk about is centralization versus decentralization. And then we can look at some very specific trading insights. And then if we can look at the offshore brokers who provide access to these type of trading strategies and type of investment management programs. Is anything that I've talked about here that you really would like to highlight, Adam?
I think what we're much like yourself, Hilton, and the rest of the team, we're really looking forward to trying to, you used the phrase earlier, to unpick what is happening in the world of finance and trading and investment, and really to shine a light as much as we can to enable your viewers and our clients and interested parties really to begin to understand what are the types of questions that might be worth asking about your financial future. What are the technologies that are being evolved that are worth considering, not from a technical perspective, but as a financial instrument, as an opportunity? One of the things you mentioned a moment ago is multi-asset trading. We see a lot of clients who stick to one particular asset class, and that may be, there may be crypto, maybe foreign exchange, could be commodities, could be anything. But the greater opportunities perhaps to balance your risk and ride the downside in one market by riding the wave of an upside in another, that I think is something we're going to be exploring with some of our colleagues as well on this platform, and how multi-asset trading can facilitate a greater degree of balance, so that you're somewhat a little bit more protected than you could be by going, putting all of the eggs in one basket. And then we have the thematic discussions, again, as you talked about, centralization versus decentralization. On the JPFS website, we're very lucky enough to have a colleague of ours, many years, Tony Westfallen, who's been in the finance industry since the 70s. He's an incredibly old man, and he's the old man, but he brings an awful lot of experience. Not necessarily it's all right, but the questions that he asks in his weekly blogs are exactly the kind of questions that we hear frequently from clients, from partners, from prospective investors. How can I make an entry into this world, or how can I improve my position? And the answer is fairly simple, if not easy. It requires a little bit of effort. You need to get to understand how you can best manage your money, or who can best manage your money for you. And that is going to take a little bit of research, but that's also what we're here for, to try to shed light on that, to make it a little bit more understandable to people what the questions they should be asking might be.
Peter, I understand that we have a lineup of some future guests who will be coming on to Tradersdna podcast series. Can you just highlight a few of them?
Yeah, it's again with this video session and all the videos coming out is to show the people behind the companies, the people behind the strategies. I like to talk to a manager. When we actually onboard a manager or looking to onboard a fund or a manager, we would like to see who is it. We investigate as much as possible to do that groundwork, but it's always nice to see what is the attitude, what is the risk profile, without having to put up $100,000 or $200,000 just to test it out. Again, we got Mikkel Thora coming on. He's head of our alternative investment and FX in JP Fund Services in Switzerland. Also 25, 30 years of experience. Like to hear his views on things. We got all the managers that we've said, you need to be on this. You need to show the people. Who are you? What's your attitude? What's your risk profile personally? Because it's a good way of doing your own due diligence. And if they say no, we're going to say, sorry, we might not prioritize you at all, but that's what it is. You've got to be transparent when it comes to these things. As Adam was saying, we're looking at a lot of websites, a lot of things. There's so many people actually hiding behind the companies and the website. We can't see who it is. And that's just a red flag for me and for us. So that's why there's going to be a lot of people coming on. And then it's up to people, to investors and clients saying, do you know what? I actually like this strategy. Let me take a look a bit more about that. And that's it. We're not going to say, you've got to go into this, you've got to go into that. It's up to them. It's up to the investor.
With Trademakers, there are a number of different managers, and we're always sort of evaluating new ones. But part of our drive here is to put the managers, the inventors, the creators of these different strategies in front of people. We've done our best, and we continue to do our best to provide raw data, untouched data, so that people can make their own decisions about the risk parameters, the performance to date, the track record, and so forth. But there is that, again, that very old-fashioned drive to put the man or the woman responsible in front of a camera and say, address these concerns. You may think you're the best thing since sliced bread, then demonstrate it. We as a platform are, in broadly speaking, we're agnostic. We want to bring a variety because we know that a variety of investment styles meets the needs of a variety of different investor. But what we're not in the business of doing is pimping any particular strategy over another. What we want to do is using the Tradersdna network and our relations here is to bring these conversations to the public forum and say, let's have it out here. What are the concerns? What typically would be how should someone with $20,000 and a 3-year horizon, what do we think? What may be the best way to chop up those portfolios? And how should your program get 10%, 15%? The very practical conversations that perhaps 40 years ago were taking place in stock brokerages around the country and around the world, because you had a personal relationship, like you had a personal relationship with the bank manager. Those relationships are now gone. They're replaced by technology. So we want to reintroduce the human, if you like, to the financial world, and because they're a vital component in helping people understand, is this something for me? Do I understand the risks? And how do I get started? So it's a lot of this we're hoping to bring to the forum over the next few months.
Thank you, Peter, and thank you, Adam, for your wisdom today. If you are interested in knowing more about SGT, Trademakers, and Tradersdna, do go to our platforms by clicking on the links below. You can also find us on social media and direct message us on our various platforms. We're very active in terms of Twitter, LinkedIn, and Instagram. And don't forget to like and comment. Thank you very much for your time and engaging with us today on Tradersdna in partnership with Intelligent HQ and Citiesabc.